Our conditions bullish in this bull market. We're seeing futures flat to slightly lower this morning. You can see here on the 1 hour time frame starting to pull back just a little bit, running into this overhead supply block. And we're seeing that supply block is going to be the issue right here. If we can push through that, see if we can get a breakout above that 6150, 6200 on S&P 500, and we could get some continued momentum from there. SPX, we're looking again, same story right here. It's still quite a bullish pattern. We've got majority bullish on the 1 hour time frame as well as on the daily time frame right here. We just have this resistance area that could push us back down into this supply zone. This is this demand zone, and we could see a push here as well. We want to watch to see if we get that breakout. We are seeing breadth improving still. It's still relatively flat, right around that 50% range. So not at an extreme one way or the other, just sitting right here in this trending move as markets seem to be building a little bit of strength, really not doing a whole lot, but kind of just gearing up as we're consolidating, creating some opportunity for a higher low and looking to see if we can break out of those highs. That could certainly happen. The only real risk that we've got at these levels are that we're really extended into this long-term trend. I went out to monthly, wanted to go to the weekly time frame, and so we are sitting right here at the upper end of this range. I have a really expanded trend currently on S&P 500 on that weekly time frame, and that's just not super sustainable for a long period of time. It could be sustainable for the next few months, certainly, but we'll keep an eye on there as a process of managing risk from there. VIX, also bullish setup, is currently sitting down at that 15. It can go significantly lower down to that 12 range, but as of now, that is still bullish for stocks to have volatility a little bit lower. SHY, short end of the yield curve, we're seeing compression on that trend currently. It's fighting. It's trying to get back up to the upside, but just is taking its own sweet time. TLT also showing some strength here in the shorter term with majority bullish. Really a neutral trend on that daily time frame. If we take a look at the yields, the 2 year Treasury yield still also compressing, sitting relatively flat right here and pulling back a little bit. I'd like to see that roll over and move down to the downside, but seeing a little bit of strength right here. We're back to majority bullish and in a compressed state as well. So that's kind of that spring-loaded compressed state where it could move either direction, but it started from this low point to high point, and we'll see if it retraces back down. And if this becomes the overall trend still, if this is our downtrend, we're compressing and then we accelerate back to the downside, or if we start to get some movement back to the upside in yields again. We've got a relatively flat yield curve. Okay, this 0.24 represents the distance between the 10-year and the 2 year. So we're positive, which means we don't have an inverted yield curve, but it's starting to pull back. Those two yields are compressing a little bit here as well. What we want to see is we want to see that 2 year really dropping. We want to see the 10-year holding or dropping as well, but just having a little bit wider spread between the 2 year and the 10 year. That's still yet to happen. Relatively flat yield curve as the Fed is just still not super excited about inflation at these levels. Dow Jones Industrial Average pushing up against these all-time highs. Majority bullish on both the daily and the 1 hour time frame. And triple Qs, that's the NASDAQ 100, also bullish at these levels and watching for some breakouts on all of these markets. We'll see if we can get that or if we're going to run into some resistance right here, kind of at that area where we could get the breakout, could get the resistance and push things back, but things are looking more bullish at these levels across the board on all of these markets that we're looking at, or these indices that we're looking at, I should say. IWM also showing some strength on the Russell 2000. USO oil, it's continuing to show weakness right here, pulling back, still sitting right around that 50% range, has yet to really show real confirmation of support at that 75 range, as oil is always volatile and interesting to talk about, but may or may not have any relevance to your trading plan. Same with gold and silver as well. They're always talked about, so it's always interesting to at least bring those up and talk to see what could be happening. Oftentimes, too, gold can be kind of a flight to quality. If we're seeing a move lower in equities or in the dollar, and we're seeing gold increase. That's, gold has had this massive run at the all-time highs. In fact, let's take a look at the monthly chart on gold and see where we're at currently, because it certainly had this massive run up and could be due for a little pause right here in gold. That's the monthly time frame. So we've seen that breakout for the last year as this has been moving, and that's getting to just an unsustainable location on that monthly time frame for gold without some kind of a retracement. So don't get super excited about gold at these levels. It is at all-time highs and could certainly have a little bit more upside, but there may be some shorter-term resistance that we run into based on those real longer-term perspectives of gold. Silver as well, seeing some movement to the upside on silver as it has been compressing and starting to expand out bullishly of that compressed state. And keep an eye on silver there as well. A couple stocks to consider today. We've got AMSC, which is an interesting stock in the energy space. A nice looking confirmation bar, real big volume, had a good earnings report. Another stock that's in the satellite space is SATL. A nice confirmation bar here. It's bouncing off that 618 retracement. And remember that anything inside of this 382 to 618 retracement, this is a counter trend or corrective zone of the trend that the fib tool finds. So it's finding the low and the high on the chart, and then it's going to draw out these locations. 618 is about the deepest level of corrective or counter trend support areas to be watching for, and it's found support right here and starting to work its way back up again. And that's one of the things we want to watch for, is that confirmation where we can kind of clear up above a lot of this really, this real demand location where we haven't, the selling didn't accelerate, it kind of paused. Now we're getting demand starting to come back at this level. What we want to see is demand push up above those most recent highs. So we're seeing it kind of peak right there on a deeper retracement pattern. That's one of the things to watch for, versus a lot of that we're looking at are already in that momentum zone. Those continue that momentum. The ones that have corrected deeply, and now you've got new demand that's got to come in. They've got a little bit more work to do, but they can be a really nice reward to risk type of setup. That's one to consider there as well, particularly where it's had a massive run here from $1 to $5. It's going to be a volatile stock, but we're seeing a lot happening in that global imaging and satellite, and really anything to do with space right now is really on the move. That'll do it for today's update. Everyone have a fantastic day and a great weekend.